Well, you're watching Left, Right and Centre. I'm Vishnu Shom. On the programme tonight, the RBI has raised its key lending rate by 40 basis points to 4.4% with immediate effect, a decision that will affect millions of people in the country. Now, we'll explain how this will take place on the programme, but the Reserve Bank says that the economic effects of war are spreading like seismic waves. If inflation remains elevated for too long, it'll be detrimental to growth and financial stability. The geopolitical tensions are ratcheting up inflation to its highest level. Now, we'll be joined by Dr. Amit Mitra, the Principal Chief Advisor to the Bengal Chief Minister and one of the finest economic minds in the country in just the next minute or two. We'll also be looking at the Life Insurance Corporation of India's IPO. Yes, there is clearly interest, but it's important to remember that the IPO, which was initially at 10% of holding, was reduced to 3.5%. As a result, the issue size declined from 60,000 crores, which is what the government would have hoped to have gained from the disinvestment process, from the listing, to 22,000 crores. So that's a huge drop over there, despite the optimism that we see. So is it all that it's made out to be? But let's just start with what the RBI has had to say. And I think it would be interesting to bring in Dr. Mitra, who's with us at this stage, to actually go through a couple of the key points mentioned by the RBI governor. Because, you know, Dr. Mitra, a lot of the quotes were very hard-hitting from the RBI governor, and I think they point to serious concerns, not just presently, but going ahead. So let me ask you the first point mentioned by Shaktikanta Das. He says that the economic effects of the war in Ukraine are spreading like seismic waves, and that geopolitical tensions are ratcheting up inflation to the highest level. What is in store for us, Dr. Mitra?
I think the first thing, Mr. Shom, is what is the state of the economy that the RBI governor is addressing? The consumer price index has 6% is the red line.
Yep.
Now he says, and correctly so, we have not only crossed that red line, consumer price index is at 7%.
Yes.
In March.
Yes.
Expected to be higher in April. Most important for common people listening to your program is food index inflation. Can you believe it has climbed up to 7.68%?
Yep.
Growing by 1.83% in 1 month.
Yep.
So petrol, diesel, medicine, even Nimbu, lime or lemon, is 10 rupees a piece for the common people. Now, same way, he also finds that wholesale price index has hit the roof. 14.55% wholesale price index, and food 8.71%. What you're talking about is unbelievable. 3 months ago, the unemployment, he obviously is alluding to that because of the managing the economy. 34 million people are unemployed in India today. 34 million people. That means 3.4 crores. And most important, lakhs of people are dropping out of the labor force, women in particular, because they're hopeless. So, and capital outflow, high trade deficit, weak rupee. So you're seeing a picture which is concerning the Reserve Bank governor on the aggregate state of the economy that we have arrived at under this government. There may be external reasons, but there are many internal reasons.
We'll talk about both.
Yes.
Now, the fact is we have sustained high inflation, which is why all these measures are taking place. Sustained high inflation, according to Shaktikanta Das, and this is borne out by the statistics, inevitably hurts savings, investment, competitiveness, and output growth. On the other hand, and Dr. Mitra, this is also an important point, the fact that he's had to raise interest rates means that millions will continue to be affected in a different way. EMIs, for example, will go up.
Yes.
The middle class will be hurt, as just one example over there. So it's, in a sense, lose-lose. But he may not have had much of a choice.
Yeah. Well, you see, this is a catch-22 to which the current government has brought the economy to, partly external, but primarily going on for a long time. Home loan, as you said, EMI, is bound to be affected. Auto EMI, you want to buy a motorcycle, a scooter, a car, that will be affected. Most interestingly, small industry, will now have to pay higher interest. Now, the other interesting point is because of the higher interest, many projects, investment projects that are about to happen, now will be put on the shelf because it's not viable anymore in terms of internal rate of return calculations. What that means is that unemployment will further grow up. And let us not forget, this is stagflation. Inflation and unemployment unheard of in modern economy. And there are no ready solutions. So what can the governor do? He has only two tools in his hand. One is his repo rate, which he has increased. The other is cash reserve ratio of banks. That means banks pull in liquidity from the market. Now, is food inflation affected by this rise in interest rate? No. It's hardly connected to because much of it is cash economy, informal. Others are affected, home loans, automobile,
not food
business.
Inflation.
Not so much.
But sir, just a point there. Dr. Mitra, the jump in fertilizer prices per the RBI governor has a direct impact on food prices in India. He said this today.
Yes, but the point is simple, that food is a very decentralized sector in India with small farmers, and farmers coming to aggregators into wholesale markets coming. So what is interesting is in developed countries, food markets are completely modern market driven with no cash peelings. In India, that's not the case. Now, therefore, I'm worried that food inflation will not be affected. However, what will be affected, undoubtedly, is the immediate investment postponement resulting in greater unemployment. So to tackle to spite your face, you're cutting your nose.
Right. So I understand what you're saying about, one leading on to the other. But, and just so that we are clear on this, there are lots of critical points mentioned by Shaktikanta Das, but he's also said, looking at the international arena, amidst these challenges, and he's talking about the global economic issue, a global economic environment, the Indian economy has shown resilience. The Indian economy has managed to weather the shock so far, and it is therefore necessary to be sensitive to new realities. He's talking about the new external challenges. Is this not fair that we have been relatively resilient? Do you agree when the Prime Minister says that coming out of COVID, we are one of the fastest growing economies?
Yes, we have been resilient to the extent that we unfortunately have not done two critical things. One is the supply chain that is there in the country completely cracked. We have not been able to repair it. Second is small and medium enterprises have not picked up the way that it should have, because it's still apprehensive because of the supply chain inadequate. They don't get the inputs to be able to supply to big entities. And the third interesting thing is the informal sector. 93% of employment in this country is from the unorganized informal sector. Have they picked up? Maybe 10%, maybe 20%, the most innovative.
Right.
But 90%, 80% have not. Is this interest rate rising? Will that have anything to do with the informal sector? No. So what worries me is, of course, the governor has only two tools in his hand. Raise inflation, raise interest rate, and also raise what is called cash reserve ratio, which he has done, to suck away liquidity. But the government, which does fiscal policy, is sitting watching. Have you heard a speech by the Honorable Prime Minister on the state of the economy that I'm presenting to you from government data? No. So my problem is that the macroeconomics of the country is today in critical position and shocked on top of that by external factors, as you correctly said. But the government is silent. Have you heard the finance minister addressing the issues that I'm addressing to you, stagflation? I would urge them, come and tell us. What is your policy? What are you going to do?
But Dr. Mitra, again, it is. I completely understand the points that you're saying, and I understand what you're trying to say when you refer to internal factors being as important, if not as more important than the external factors which I've referred to. But when you look at some internal factors and you look at inflation, for example, fuel inflation, there is, there's this chicken and egg debate which keeps going round. What came first over and over again? The centre says states need to cut down on taxes, rationalize taxes, fuel inflation will go down, fuel costs will go down. On the other hand, it's equally true that crude is at $100 a barrel plus. There is an argument by the centre, sir, that the states need to do more. I don't know about Bengal necessarily, but other states.
I think it's a very important point. Let me just give you the real data being hidden today. The diesel taxes on diesel, compared to what the state is doing, centre is taxing 54% more than the states. In petrol, it is 25% more. All they have to do is equalize with the state. Immediately your diesel and petrol prices will fall. So that is federalism. You're doing it for GST, where we share 50%, centre shares 50%. Cut down your 54% more in diesel as compared to West Bengal, Calcutta's rates I'm giving you. Cut down on petrol by 25% higher taxes you're charging. And do you know how much taxes they've collected? It's phenomenal. It's phenomenal. I mean, only last year, 2020-21, central government collected 3.74 lakh crores. And the total amount in the Modi period, the government period, if you look at the Prime Minister Modi's period, humongous collection from this. All you do is, I'm giving you a solution. Equalize. Right. State and centre's taxes, immediately petrol prices will fall, diesel prices will fall, irrespective of the external factor.
Okay.
Then you have the similar to GST. Why aren't you doing that?
Dr. Mitra, I'm running short on time on this, but I wanted to ask you one more question on the LIC IPO without for a moment suggesting that the buzz that exists now is not well deserved. A lot of people have put in their hard-earned money. They want to see the LIC IPO succeed. I'm sure all of us do. But initially the LIC IPO was meant to be 10% of holding. It was reduced to 5%. It came down to 3.5%. Therefore, from about 60,000 crores or 60,000 crores plus, it's come down to 22,000 crores, which the government would like to hopefully gain or collect. Call it what you may. Should we not be looking at this as well, that it's not realized its true potential?
Well, you see, first of all, I'd like to object to the question of LIC being disinvested in a volatile market condition, volatile global condition. I think it would be useful for your listeners to know, it has 30 crore policy holders, fifth largest in the world. It has 81% of the market share in terms of policies issued. 24 lakh crores investment in central, state and development expenditure. And 31 lakh crores of assets, second only to SBI. My question to you first is, why are you selling family silver first of all, in principle, if in practice you're doing it at a time when there's volatility in the market, and you've lowered the price from 1,000 rupees a share to about 920 to 945, somewhere in that range. Why? You ask them, why did you lower your pie? Undervalued? Oh, it will sell very quickly. Excuse me, you're selling family silver, you're selling the golden goose that lies
at a devalued
as many
rate.
Economists have said. So my objection to this is, one, in principle. Number two is in practice. In a volatile environment, lowering your valuation, which means you're selling your family silver cheap. Not only are you selling it, and the golden goose that lays the golden eggs. Is this the right thing to do? Why are you doing it? Only for one reason, Mr. Sean. To meet their disinvestment target set in the budget.
Which has been, which Dr. Mitra has not been realized since 2007, I think.
Exactly.
Maybe just once.
Exactly. You're absolutely
But that's true of all governments. It's something which every government says that they'll meet targets and they come nowhere close to it. But look, I'm sorry, I just need to move on, and I thank you as usual for explaining this to us in such simple terms. Thank you very much, sir, for being with us.
Thank you.
We've got other perspectives on this program. Madan Sabnavis joins us, Brinda Jagirdar, Subhash Chandra Garg as well. We are also joined by somebody who feels the pinch or is going to feel the pinch of increased EMI, Sukanya Mazumdar. So we've got two things that we are talking about. We are talking about the RBI's pronouncements and also LIC. Madan Sabnavis, let me come to you first. About LIC, you heard what Dr. Mitra had to say. Are we selling the family silver, the family jewelry at a devalued rate? Is that something we need to be thinking about?
No, actually, Vishnu, I wouldn't say so. I would have a different view, because I think whenever you go in for a disinvestment and you want a successful disinvestment, you want a disinvestment which involves a large section of the retail investors. You definitely want to leave something on the table. So you do know what the real valuation is. You price it at a lower price so that those who invest in it will have the benefit of an upside. So I think that's the way I would look at it. And even in terms of the volatile conditions, I think we should I look at it more in terms of the strong signal being sent by the government that is very determined in terms of disinvestment, something which couldn't be done in the last financial year because of the war conditions which started in the months of February and March. I think they have consummated it in this particular month. So I think it does credit to the government about what they have done. So I wouldn't be critical about both these factors.
Vrinda Jagirdar, let's focus on the other big debate today. That is the RBI raising rates. They perhaps didn't have enough of an option. In as much as the RBI governor talks about the external factors, how India has been resilient thus far, what Dr. Mitra was actually talking about is the economic challenges which lie within this country, and that it's not enough to just say that there's a war happening outside and we are feeling the shock. Yes, we are, but are we fundamentally strong inside?
Vishnu, there's no point pretending that everything is fine in the world and only India is not doing well. There's no point pretending at all. I think is the whole, we were just coming out of COVID. Yeah. And just look how well we have managed in India. Was the fastest growing economy in the world after COVID. So that is one thing which I think we need to appreciate. And second thing is this war that has really thrown the whole global economy again and pushed them back to square one. There is no point pretending that we are not affected by it. You can say what you will, but that I think does not wash at all. Now, this thing is that fertilizer prices are going up. So definitely it will affect food prices and food inflation, not only food inflation, but all the other commodity inflation is affecting the economy. So this is one, because RBI had clearly said that its policies are going to be data driven. So what is the inflation telling you? So it's not all from domestic factors. It's from the what we have, like the supply chain is completely broken. Right. So all this affects inflation. Now, not only inflation, when RBI made its policy last time, it said that it would, it's assuming that oil would be at $100 per barrel. Look at where oil has gone now. And there is it looks like it is going to climb even further. And then look at the markets. The market rates have gone up. So, I mean, and the RBI introduced the new STF facility. That itself was an indication. And I think all credit to the RBI. They had been preparing the market for a long time that we need to unwind the extraordinary measures that have been taken. Now, even the CRR hike, this drains out only about 85,000 crore. And on a daily basis, the government said the surplus liquidity in the banking system is about 2 lakh crore. Right. And for the whole month of April, it's more than 7.5 lakh crore. So liquidity is not an issue. Governor has said that he is standing by to make sure that the productive sectors of the economy will get the liquidity that they need. And now corporate balance sheets have been repaired. There's excess capacity in the economy. The imports of non-oil, non-gold items show that there is demand for manufacturing in the economy. So I think we need to support that part of the economy which has been so badly affected and disrupted.
Ma'am, I just need to go on to my other panelists simply because I'm running short on time. Mr. Garg, let me ask you this. The RBI governor also said there are signs of an incipient revival taking place in the investment cycle. March inflation was propelled by food inflation because of high global prices. We know that. But the overall environment is no longer as conducive to growth, neither externally nor India at the moment. Is that the big worry now?
See, the corporate profits have been good, which has resulted into excellent tax collections for the government as well. And there's also been signs of the credit demand picking up. So credit from the banking system has also grown. So these do indicate that there's been some investment returning to the economy. But that, if you juxtapose that against the kind of inflation which was there, especially in the wholesale sector, which is where the investment is affected, that neutralizes the kind of investment growth which you see in the credit. So my sense is that there is no real growth of investment if you minus the inflation there. What today the RBI governor has done is to, in a way, because RBI has been pegging the rates to the consumer price inflation, not the wholesale price inflation. And that has been running very low. So it has now been done. The two measures which have been taken confounds me a little bit. The CRR hike has practically no impact on the inflation. It only increases the cost of money for the banks, and some of the banking profits gets transferred to the RBI because RBI doesn't pay on the CRR. Why was this measure necessary to even have anything to do with the inflation? But the rate which has been increased has a direct signaling effect on the inflation. But by the way, the real markets have already moved up. So we had 7% rate of interest already for the 10 years.
Okay,
so
Mr. Garg, go ahead. Just finish your sentence, sir. Yes, sir.
No, my sense is that the policy which has been taken decisions today is, number one, delayed. It should have come. Nothing has changed in last 1 month, which warranted a midterm policy change. Secondly, it may not really work to control.
All right. Well, that's an interesting point, which we'll sort of look at more closely perhaps later. I'm again interrupting. I'm out of time, but I want to go across to Sukanya Mazumdar. She's a school teacher, is paying an EMI for her daughter's educational loan. Sukanya, with EMIs likely to go up now as a result of what the RBI has done, does this add a great deal of financial stress to you and your family?
I'm overawed actually over here in this August gathering, and much of what you are saying goes above my head, but what I know is I'm hard hit very hard. There isn't much change in my paycheck, but fuel has gone up. My transportation is hit, the gas, my maids, everything has gone up. And now the EMI I shell out every month.
This is EMI for your daughter's educational loan, right?
Educational loan, which is, which is a little steep. But then we had planned it keeping in mind our combined paycheck and and we had taken in consideration some amount of inflation also. But we hadn't realized that things would go the way it has gone.
Yeah.
In fact, even the health insurance.
Yeah.
This year I paid around 15,000 more for the same health insurance.
Yes, that's true.
The premium has gone up.
The premium has gone up, yes.
And that hits.
It certainly does.
I don't know about others, but it hits
I think it certainly hits
like
millions across the country, and obviously it's something, the impact of which we're going to see in the days ahead. But I'd like to thank you all very much for sharing your perspective. We had Dr. Amit Mitra earlier on talking about how we need to look at the situation within the country, not just look at the external factors, giving a shock to the economy at this stage. Predictably, lots of comments coming in. These are comments on coup. Shiv writes in, says, is high inflation detrimental to growth? Atul says this was important in view of rising inflation, geopolitical tensions, high crude oil prices, and a shortage of commodities globally, which have impacted the Indian economy. All right, well, lots of key issues over there. Let's see what the impact is of what the RBI has done today. For millions across the country, AMI is possibly going up, other expenses going up as well. But were there any options before the RBI governor? He has only two weapons. He's used one of them. Let's see if it works out. Out of time. Goodbye.